to another Mortgage Minute here with Brian Dewald. And Brian is, of course, a local lender. My name is Matt Thomas. I'm a local real estate agent, and we appreciate you checking us out. So every week we basically just take a quick stroll down through the news, if you will, and talk about mortgage rates and what factors go into determining what those rates are. So that's why we've got Brian here. Brian, tell us what's going on. What's the latest?
So the latest and greatest, we spoke a little last week. We were on a decent little run as far as mortgage prices go after the last Fed meeting, which was towards, what was it, the end of June, I suppose. Higher increase from the Fed than anticipated, so that rallied mortgage rates, believe it or not. Again, the Fed rate doesn't have a direct impact on mortgage rates. And then since then, in the last few days, we've seen a little bit of a sell-off, if you will. Rates have ticked up just a little bit, not a lot, but a little bit. This morning, we were anticipating some big news today on July 13th. The Consumer Price Index was released, the CPI, and that talks about all of the inflationary stuff that we've heard out here. So inflation's up a little bit as of this morning, 9.1%. That is probably not awesome news for mortgage rates. We'll sort of see what happens over the next few days here. There's a big auction on 30-year mortgages later today, so we'll see what kind of impact that has. If that's good, maybe that'll sort of offset some of the CPI news that we heard about this morning. But anyway, up just slightly from where we were a week ago, and that's kind of the news of the week, I suppose.
We'll see how the markets react, right? But the news about sliding, further into potential recession is usually kind of what trails, the news about the CPI being up as much as it is. And I think we're all kind of aware, like the inflation feels a lot higher. Whether it feels higher than 9.1, I don't know. But there's a lot of numbers that are stripped out of that, and we've seen. Obviously, prices are up more than 9%. Home values are up more than 9%. Gas is up way more than 9%. And, food is up in a lot of ways and more than 9%. So some of those numbers are actually stripped out of the CPI, as I understand. And so that number actually, we may be actually feeling it worse than that number actually would indicate.
Yeah, I saw the report this morning that kind of broke down month over month and year over year. And the interesting, you mentioned food and gas. Food is up 42% and this is a general speaking in terms of food, up 42% from last year, and gas was up 60% from last year. So
42%, wow, that's crazy. Well, it is what it is. So, we don't want to spread bad news. Don't think there's necessarily any bad news. We are down from what the high mortgage rates were. I think there's still a lot of optimism that, this is actually a decent time to buy. What I came across earlier this week was that the average over the past 20 years is actually higher than where we're at currently. So if you just look at our average for the past 20 years, you're still doing better than that. Again, if you compare it to January, it's not going to feel better. And then also in that article, he actually mentioned one thing that hasn't been hit by inflation, and this isn't a commercial plug, but Arizona drinks apparently are still 99 cents, and they have been for 30 years. The funny thing about that is I was thirsty when I read that, and I was like, hey, I should pick up in Arizona. So, but funny enough, for 30 years, they haven't actually gone up in price. So anyway, Brian, what else is valuable that we should probably be paying attention to right now?
The one thing that I've had a lot of luck with lately, and this is in comparison to the last 60, 90, 120 days, is just folks getting under contract. I literally think, even with rates being where they are, it's a much better and easier time to buy right now than it was, 3 or 4 months ago, just given the fact that we don't have to guarantee, crazy amounts over asking price for appraisal. We don't have to pay a crazy amount over asking price. It's just we're getting closer to a balanced market, which is really what we needed around here and nationwide, to be frank. So it's been a good run for folks getting under contract without having to give away the farm to get the house.
Well, and I think generally people are still adjusting to the news. They're adjusting to there being more to choose from. Home buyers are, I'm sure, the ones that are very much in the game still are very pleased with the amount of choices they have compared to just a few months ago. Obviously, it's a little bit more expensive to buy a home in terms of the rate, but in a lot of cases, the home prices have come down. Now, the important thing about that, and I know we focus mostly on mortgages here, but the important thing about what's going on with home prices to remember is that prices actually do come down in the summertime anyway, as literally the world goes on vacation. We've got home buyers who are tired of the spring market, go on vacation. Mortgage people go on vacation, real estate people go on vacation. And so there's generally less activity anyway. And so for those who are sticking it out in this market, by the way, I think, that's for most people, that's a real strong consideration that I think you should make. Because I think that prices overall will continue to go up, believe it or not. There's some real advantage to the market right now. So it's important, I think, to convey that for sure.
Yep, I agree.
Very good, Brian. Anything else to share? Or
I think that's it. I'll have some more information next week as it relates to mortgage prices and stuff. We'll go over that then. Yeah,
fair enough. As always, subscribe so you can get up-to-date information on the latest with mortgages and the housing market. We'd invite you, obviously, to give Brian a call and to consult with Brian about what's going on in the mortgage world right now and how that would impact you specifically, and where you might qualify for rates. See if there's any other things that need to be done financially that can better your overall finances. So, and with that, I guess until next week, Brian.
Sounds good. Thanks again for having me.
Thanks, buddy. Talk to you later.
All right.